Welcome to Sector Report. I'm David Beatson. On this edition, political change in Europe is giving financial markets the jitters. Next week, the government unveils its new budget. What's coming up for agribusiness? Connor English outlines Federated Farmers' views on the budget and beyond. And we take to the fields to check out our latest maize harvest and the prospects for arable farming.
One way of telling how dry the grain is just to put it in your teeth and give it a bite, and if it's really hard and cracks, well, it's really dry.
Well, if there's one thing that worries cropping farmers, it's a wet summer. It might be great for growing grass, but it's a big problem for harvesting crops like maize. Higher than normal moisture means higher than normal risk of disease, more effort and money for fungicides and grain drying. And a late harvest means the pressure's on to get the autumn-sown crops into the ground. Our Rural Affairs correspondent Drew Chappell takes the pulse and discovers how arable farmers are coping at this critical time of year.
If you've taken a drive around the country recently, you may have seen plenty of this. It's harvest season here in North Waikato, the busiest time of the year. New Zealand now produces around 1 million tonnes of grain annually, and each year we're planting more.
Rain just right through the whole season when we needed it, and this high country up here does tend to dry out quite bad in the droughts, and this year the rain just came along at the right time, and we were lucky.
Luck is a big part of farming. That is to say, most farmers wind up keeping their fingers crossed that rain and sun turn up at the right time and in the right amounts. Growing maize is certainly no exception, and this year it seems Graham Baitup's luck has been in.
We were probably around 11 tonne a hectare last year. This year it's looking quite positive, so I don't know, it could be up to 14 tonne or something like that. The quality of grain this year looks exceptionally good, so we're very pleased with that.
Farmers all around the country are smiling as we head into winter. Pasture and crop growth has been phenomenal so far, leading to a surplus of grass for silage, and in the maize field, bigger and better plants.
It's got a good long cob, it's full right to the end. Some years where you get nutrients lacking or moisture, they'll taper off at the end so you don't get the end filled with good quality grain. It's got a good number of kernels round. That one's probably an 18, which is good. Some poor years might only be a 14.
The country's maize fields are usually pretty tranquil places to be, but of course that all changes at harvest time. In 2 days, Graham's 44 hectares will all look like this, ready for the cycle to start again. One of the hardest decisions Graham must make is when to start bringing the crop in. As with the weather, timing is everything.
The weather's good now, so it's ideal weather for harvesting. So some years at this time of the year we're ploughing around in mud and that, but it's yeah, we're lucky this year. It's really good. Let it dry down to as close as we can to 20% moisture, and then get it off as quick as possible. We have to pay the drying down to 14%, so the drier it can be in the paddock, well, the less it's costing us for drying fees. So that's what we aim for. It's always cheaper to let the sun dry it than have to pay for LPG.
And for most arable farmers, Lady Luck has been consistent this year. Recent sunshine meaning the ground is firm for the harvester, and the maize is drying out rapidly.
One way of telling how dry the grain is just to put it in your teeth and give it a bite, and if it's really hard and cracks, well, it's really dry. So if there's a higher moisture content, you can sort of tell it's a lot more doughy and just spongy.
Right, okay.
Around the 20% moisture is good as far as cost-wise for us. Yeah, it looks good this year. They all look very good quality, so we'll soon find out when we get all our trucking weights in, and we can work out our yield.
Once gathered, the maize is transferred to a large holding bin by the slave tractors, each with a capacity of around 5 tonnes. It's a delicate process. From there, a truck arrives to transport it to a processing plant. Once there, the maize is unloaded and examined for quality control, tested for moisture content and weighed to determine what each farmer gets paid.
This is the docket that comes back from the dryer. This shows how many tonne of grain that we sent up on the truck. So in this case it was 30.36 tonne of wet grain. The moisture content was 20.3%, which is good. We're pretty close to that 20%. The test weight just shows the weight of the grain. There's a variety of the grain we sent.
This is the culmination of the whole season's work.
Yes, yeah. So this is what we've been working for the whole year, and so I think we'll be happy with this result this year.
Things are going so well for growers like Graham, in fact, that the processors can barely manage the volumes. Tuakau Grains is the country's largest grain storage plant and dryer. At the peak of the season, they can handle around 40 tonnes an hour coming in through the facility's 2 huge dryers.
We're running through between 40 and 45 tonne an hour at the moment. With the low moisture that is coming in, we can achieve that. There is going to be a lot of high yields. I don't know what's going to happen to it all at the end of the day, but it's, yeah.
Dennis Welch has run the plant for 22 years and says this season is one of his busiest ever. After the drying and refining process, the maize is brought here, where it's mixed with a host of other grains such as soy, wheat, barley and palm kernel, and made into a feed meal for stock. That means dairy farmers will have access to more meal for the winter, although many will have enough feed stored up to last them anyway.
There's a variety of products that we put into that stock meal. It's really done for the market of the Upper Waikato, South Auckland. In the main for dairy cattle. We do some for the local market, for the home ones that have poultry and that, you know, the small block areas. A lot of our bagged foods goes out to that market.
And on a global scale, that trend is repeating itself. Continued increases in the demand for biofuels have meant grains are increasing in price internationally. Both biofuel and stock feed demands are driving prices upwards, especially in Europe. In an industry at the mercy of the elements, both local and global, the stars seem to be aligning for men like Graham Beatson, just in time to start a new season.
Drew Chappell reporting. Coming up, financial markets get jittery over political changes in Europe. The government's about to unveil its new budget. So what's in store for farmers and agribusiness? Welcome back to Sector Report. Well, austerity is still the order of the day in New Zealand, but international financial markets are jittery as the world gets to grip with major political changes in Europe, where economic austerity is under the gun. But a week from now, we'll all be focused on our government's new budget. The zero-sum budget it's being called. Well, what'll it mean for agribusiness? We're joined by Massey University's newly appointed Professor of Innovation and Economics, Christoph Schumacher. Welcome, Christoph.
Good morning.
Okay, we've seen some reaction in the financial markets. Is that what you expected to see as a result of the political change in Europe?
Pretty much. I don't think anything unexpected really happened. France has a new designated president who looks for stability and more openness. He supports Eurobonds, so I think that'll be a good move. Greece, I think, is a slightly bigger problem because the Conservatives lost a lot of ground and the extremists are the second strongest party now, and they announced that they are not keen to stay with the EU and the Eurozone. So there's a certain amount of uncertainty and markets respond to this.
We saw a little bit of jumpiness immediately after the events occurred in both France and in Greece. And of course they've still got governments to be sorted.
Yes.
So jumpiness is still going to be a bit the order of the day.
Yes, and we would expect nothing else. It always happens when big elections come up, whether it's in France or in Greece or anywhere else, and the markets respond, and once things settle down and there's a bit more certainty, things get back to normal business.
One of the things we saw on the heels of this was a fall in the Australian dollar. Is that likely to affect our exchange rate too?
It's not really the fall of the Australian dollar, but the fact that New Zealand and Australia are very, very similar economies, focusing on primary commodities and agriculture, and whatever affects Australia tends to affect New Zealand as well.
Well, I mean, the fall indicates that there's a sort of decline in demand for our dollar. Does that mean the safe haven issue isn't as important now? These
maybe it's not the safe haven not being important, but that maybe confidence is coming back into parts of Europe, with possibly France looking stronger. And since France owns a lot of European debt, that's a big concern. So maybe it was people investing in New Zealand just before the elections as a result of the uncertainty, and are now just pulling their money back out and investing it elsewhere.
Okay, one of the things we have been seeing, though, is that New Zealand export commodity prices have been declining from their previous peak levels. Yeah. What do you think the trend's likely to be now?
To start with, I'd say that we were on really peak levels before, so it was fantastic. The commodity prices were very high, and now they seem to be more readjusting. But this is driven by a slowdown in demand from Asia, especially China, and maybe that's a trend that is going to continue, but I wouldn't paint a black picture. Commodity prices are still very solid, and I believe they will remain.
Just how well placed is New Zealand in terms of weathering any instability we might run into from here going forward?
I think New Zealand is very, very well placed, simply by the fact that New Zealand is actually doing okay. The economy is stable. The debt to GDP ratio is very, very good compared to other countries. It sits at around 40% versus around 80% in the US and Europe, and Japan over 100%. So I think New Zealand is still very, very well placed to weather these instabilities. And currently, I don't think the instabilities are as big as maybe sometimes they are made out to be. But I think New Zealand is in a very strong and solid position.
You've just finished a study on the strength of our banking system.
Yes.
What did you find? I mean, are our banks in reasonably good shape?
The banks are in reasonably good shape. First of all, most New Zealand banks are owned by Australian banks, and they're very well capitalised, far better than a lot of other banks we've seen in the US and in Europe. Banks have been making profit, so they're actually quite healthy at the moment. They have recapitalised over the past years. So I don't think there are any issues here. On top of it, New Zealand's credit rating is still very, very good, so there shouldn't be any concerns about New Zealand, Australian banks raising capital.
One thing that is going on is we've got the Reserve Bank currently talking about new policies, and essentially they want to strengthen the resilience of banks in case there is another global financial crisis. It boils down to actually either having more assets or keeping more in their cupboard. Yeah. How are these policies actually likely to affect the bank's borrowing and lending capacities?
First of all, the Reserve Bank will introduce those measures not to rectify poor behaviour in the past, but purely forward-looking to make the banks even stronger. And I think that will actually increase the bank's ability to borrow overseas, and at better rates than a lot of other banks that are not so solid. So I think the Reserve Bank just tries to make sure that the banks stay in as good shape as they are looking ahead.
Well, looking at the pressures on domestic borrowing, we've got two major cities, Christchurch and Auckland, with heavy capital requirements for infrastructure development. The government's committed to infrastructure development. Are those pressures actually likely to affect funding for our rural and primary sector development?
There's often a misconception that the amount of money is fixed. Meaning, if some money goes to Auckland or Christchurch, there's less money for other things. But internationally, there is money available for good projects. And I don't think that these initiatives coming up for Auckland or the rebuild of Christchurch means there's no money for other good ventures, the agribusiness sector, for example. If a project is viable and seems solid, there is money out there to support these projects.
Is this a time when farmers and agribusinesses should be investing in development, or a time to sit tight?
First of all, at this stage, we all now have to say that I'm not.
You are not a financial advisor.
I'm certainly not. But
yes.
Well, don't forget that there is a certain amount of turmoil and instability out there. So maybe it's time to be wise and invest wisely. If a project looks really good and promising, there's money out there, and probably at a better rate than in the near future, when demand on money is higher and interest rates might go up, cost of money. But let's not forget, in times of uncertainty, it's probably better to wait a bit and be more on the side of caution.
I hear the word caution. Christoph Schumacher, thank you very much. Christoph Schumacher, the Professor of Innovation and Economics at Massey University and co-director of the newly formed Auckland Knowledge Exchange Hub. Next, Connor English, Chief Executive from Federated Farmers, talks about the budget and beyond. So stay with Sector Report. Well, the budget will have some big ticket items on the political agenda affecting the future of agriculture. $400 million to be earmarked from state asset sale proceeds for new irrigation schemes by a Crown Water investment company. $70 million for joint venture projects as the Primary Growth Partnership program hits top gear. And we're told tertiary education funding will now address skills shortages in science, technology and engineering, key for agriculture. Meantime, Parliament is also considering the dairy industry restructuring bill, setting the scene for trading in Fonterra shares and derivatives, and Commerce Commission oversight on the process for setting the base milk price. Connor English, Chief Executive of Federated Farmers, joins us now. Connor, thanks for joining us. There are three important items I think we're looking at in the budget: the Primary Growth Partnership, the irrigation funding and skills shortage tertiary sector adjustments. Is there likely to be any other surprise on delivery, you think?
Well, look, as we all know, the government's books aren't looking too good. I mean, they're looking at a deficit of sort of 10 to 12 billion. That's a lot of money. And of course, when you have a deficit like that, you've got to pay it back sometime. So I think the Minister of Finance and the Prime Minister are taking a pretty conservative view to this budget, and you know, it's already been touted as the zero budget. So in terms of extra money into areas, I think it will be pretty challenging to get extra money. But you're right, in terms of, we lobbied pretty hard actually to get $400 million into the irrigation side of things, plus that $35 million to help investigate irrigation schemes. And that's, of course, dependent on the sale of some of the state assets.
Yeah, I was going to ask you about that. I mean, what's your view on the mixed ownership model and sale of assets?
Well, look, we don't have a view on that.
Do you like what they're going to do with the money next?
With the proceeds, I think that, you know, I mean, if you look at those assets, they're about 3%, I think, of total government assets. And all the government's looking to do is sort of change their configuration, if you like, which is what a lot of private sector entities do. So putting $400 million into hard assets in the irrigation field is actually very productive for the country, because what we know is that for every 1,000 hectares that's irrigated, you actually get $7.5 million cash into the economy every year, and you generate 27 new jobs that weren't there previously.
Can you really put $400 million to work quickly when we need a full freshwater strategy and we need a new system for water allocation?
Yeah, well, look, we've got the Land and Water Forum, which has been going on for the last sort of 18 months to 2 years.
I'm well aware how long it's been going on. That's my point.
Yeah. Well, you know, it's just reported to government just recently, and then the government's got to look at its recommendations and see how that translates through to legislative change. But you're right, the frameworks around water are fluid at the moment. I've said for a long time now we're going to have more change in the next 12 months than we've had in the last 100 years, and it's going to impact the next 100 years. So when people want to invest in water storage projects, they do need to have certainty around that regulatory framework and the water allocation. But that will come through, and you know, you can't build a dam overnight, and that's why there's $35 million to invest in the analysis to make sure that what is done, what projects are done, are going to be economically viable and are going to make a positive contribution.
I want to turn to the Primary Growth Partnership. It'll be moving into top gear, and the budget's expected to deliver $70 million for commitment through that project. $120 million has already been committed since 2009. Is it actually producing results? It was intended to improve productivity through innovation. Is it actually actually doing that?
Well, look, there was some major announcements last year in the dairy sector and also in the sheep and beef sector with Dairy NZ and Beef and Lamb partnering up with others in those sectors to look at some significant multi-year projects. So it's like any project, you've got to start. And they've started. In terms of what is it delivering right now, I think the jury's still out on that. Some of these things are around genetics, genetic improvement, that sort of thing. It just takes time. Science takes time. Productivity takes time. But what is critical is that the money is committed, it has gone in there, and work is underway. So it will certainly bear fruit.
Not in the budget, but certainly on the parliamentary agenda, we've currently got the Dairy Industry Restructuring Bill. Now, Federated Farmers have got some significant worries about this bill as it's framed, haven't you?
Yeah, look, for us, I think the critical thing is about farmers making informed decisions, and farmers need to be treated with the respect of shareholders in New Zealand's largest company. The phrase that drives me, concerns me significantly, is when you hear people say they're just farmers. Well, actually, farmers are better than a lot of people think. And secondly, as a shareholder, you've got to have
one of the New Zealand's largest companies.
Exactly,
you know.
Exactly. But look, there's been a lot of mixed messages about what the proposal is, how it's going to operate, what it means for farmers. And so what we've said is we need to have another vote. The details, the devil is in the detail. They need to be spelled out to farmers, and then they have a vote on it, and then Fonterra should act after the government has passed the
you just put
enabling
a submission into the Select Committee studying this bill.
Yep.
And amongst other things, you say that you're pleased about the second vote.
Yes.
But it's still unclear how it would be conducted. Is it any clearer now?
No. And look, as I said in the Select Committee, Fonterra actually hasn't passed the test of being a good corporate and informing its shareholders. It's got a hell of a lot of work to do to meet that test, and it needs to produce specific details so farmers can make an informed decision. That will be the challenge for the board, and I hope they'll be held accountable on how well they do that.
Well, let's talk about the price of milk, because that's one of the fundamental things that this bill could alter, in the sense that it's got a process for Commerce Commission oversight over the price setting for the base milk price. Now, you're worried about what's there.
Well, listen, it's a wee bit unusual for a company's pricing of any product that they sell to have some sort of oversight from any government sort of entity. So we would certainly agree with Fonterra that the Commerce Commission shouldn't be setting the price of milk, as happens, say, in the line companies, electricity line companies market. You know, the Commerce Commission effectively sets the price there. So having oversight, the reason that they want to have the oversight is when you have a listed entity on the stock market that is going to receive a dividend, you need to have transparency around how much the farmer gets for his milk and how much the investor gets for their dividend.
I'd rather thought that farmers might be a bit concerned about it too.
Yeah, but I mean, you know, the trading amongst farmers and having an entity listed on the stock exchange that receives Fonterra's dividend is a whole new world. And so you've got to have some of these protections.
So is the Commerce Commission second-guessing people on setting the basic milk price?
Well,
have they got enough clarity in that bill to allow the Commerce Commission to make a really rational view when it does take a look at it?
Look, the bill itself is actually a very brief bill. It's only a few pages, and it's at a very high level. So it doesn't actually give any guidance to the Commerce Commission on how it assesses that price of milk. That's really going to come from the milk price manual that Fonterra will provide to the Commerce Commission. So, you know, there's going to be a few bumps along the way, I think, on this road. The real issue is if the Commerce Commission has a different view than Fonterra, then what happens? And what the bill says is that they're not allowed to articulate in public what the price of milk should be. We actually agree with that, because you can't have the Commerce Commission setting the price of milk.
Okay, final question. After this budget, we've got a jittery international scene, commodity prices have been coming off peak. Is this a time when farmers should be investing in development or putting their hands in their pocket?
Well, look, it's like any
Simple
business. Look, it's all about cash flow. The successful businesses are ones that have more cash coming in than they have going out. The good thing at the moment now is that you know, interest rates, long-term interest rates, are coming down. The government bonds are at their lowest level they've ever been. So if you look out over the next 2 or 3 years, it would be a brave person to say that there's going to be a lot of raising of interest rates. That's a significant cost for farmers. On the commodity side of it, yeah, look, there's a lot of uncertainty. We've had a few prices come off. You know, you've seen lamb come from sort of $8.20 down to $5.80. You know, beef sort of come back from, you know, roughly $5 down to $4. And the payout next year is looking like it's going to come back perhaps $1. That's going to have a significant impact on farmers' cash flow. And yep, I think they will keep their hands in their pockets.
So proceed with caution,
Absolutely.
hands in pockets, and you're not a financial advisor.
Exactly. I'm not a financial advisor at all.
Connor English, thank you very much.
Thanks very much.
Connor English, Chief Executive of Federated Farmers. And that's all for now. On our next show, rural correspondent Drew Chappell travels to Winton and the growing population of migrant dairy workers from the Philippines. Remember, you can check out our programs anytime online at country99tv.co.nz. Thanks for your company. I'm David Beatson for Sector Report. See you next time.